Little bit of a pump going on with Bitcoin right now. Are we looking at the real recovery for this market, or is this going to be more price action that disappoints? I think the first key thing that we've got to look at is just the fact that we've got this really obvious kind of price range here in the low $90,000 range where Bitcoin kind of actually managed to top out. Actually, this was more in the mid 90s. And since then, we've kind of been slowly trending higher, basically approaching the same levels yet again. But this time with less strength, and I think that's the main thing I want to focus on right now in this video. There's a lot that we're going to be talking about, a lot that we have to go through in this YouTube video today, so smash up the likes for that if you are excited. But honestly, one of the first things, and arguably the most important thing, is just understanding that originally we bounced off this $78,000 price level, and we had a big, fast, sharp recovery. It lasted only about 2 or 3 days, but it did take the price up by about 20%. And then from there, the follow-through was lackluster, right? I mean, we set another low over here at 81, but then we bottomed out. We topped out a little bit lower. We basically formed a bear flag that ended up setting a new low. And, we can't really analyze what's happening today, and I know that you want to, without first understanding how we got here, because inherently, it's always going to be the longer term charts that kind of, take precedence, right? And I think that's something that we kind of understand on some level, but, when we start watching the chart and when nothing has been going on for a few days and then suddenly we start getting a breakout, we do have a tendency to kind of lose focus a little bit. But again, that's why you're here. That's why you're on this YouTube channel. That's exactly what we do. We keep it very grounded and level-headed. And what we understand from this very long-term perspective is obviously, the charts are on our side, right? I mean, there was really not much confusion about this. I think whether Trump got elected, whether Kamala got elected, or whether this isn't even a discussion about elections whatsoever, our trend was pointed up and to the right, and I still believe that's going to be the case. Obviously, a much bigger chart to look at, much more important chart, I should say, to look at is going to be the S&P 500, and the S&P 500 also is looking phenomenal. There's a lot more analysis I'm going to come back to on this chart in just a minute, so bear with me here. But let's blaze through this Bitcoin situation right here before we get to the S&P 500, and what we understand now is that we did initially get our bounce, then we set an even lower level, and this next bounce is even slower, and it's taking us lower. Okay, it's not even taking us as far, so slower and lower is not a good combination when you're talking about recovering the market. Now, is it possible? Yes, absolutely it is possible, and we're going to get to why a little bit later on, because there are some things that are really good on this Bitcoin chart and some things that help Bitcoin outside of this Bitcoin chart as well, which are really interesting, that we'll get to in just a moment as well. But what we do have to acknowledge very well at this point now is that we are going to be encountering some of the same resistance levels that have already given Bitcoin a little bit of trouble, like over here when Bitcoin set this peak right here. That didn't go particularly well for Bitcoin, and we are just now approaching this level here. So if we zoom in very tight, we can see that we did have a kind of resistance zone stretching basically at about kind of 84,000, basically throughout the $84,000 price range. Obviously, now we've gotten a pretty clear breakout above that, and if we measure this basically from that breakout point to the high, we're up by about 1.3, which is nothing crazy, but 1.3% is still good. If we do end up coming back down here, this now becomes an interesting zone to start taking some longs, which I think is really interesting in this market, because those are the kind of easy trade opportunity. And by the way, look, there's so much confluence with this as well. These are the kind of easy trade opportunities that we really wait for, and that, it's painful when we don't get them, during these kind of more sideways trading ranges. So I really like the look of that. Not necessarily something I would take. It does obviously take a little bit of skill to trade ranges like this, and I just don't think that it's worth it either. And I say a little bit, it actually takes a lot of skill to trade ranges like this because you're effectively competing against bots. But, it's still entirely possible. I think on balance, taking trades like this, probably a good idea. Maybe just fish for a little bit of a better entry. The market might deviate below, but that starts looking interesting to me. And I'll tell you what, there is a really cool competition being run by Bybit right now. Take a look at this infographic right here, Legends of Trade VIP Arena. There is a prize pool of $1 million, which you can get your share of just by trading on Bybit. The reason that this is interesting is, look, if you were already going to be making trades in this market, then you can enroll yourself in this. It's linked at the top of the description. You're going to see it, in the same place that we always have the links, basically right up here in the top of the description. If you're already going to be making trades, then you have a chance to enter a prize pool and get even more money just based on your trading volumes. You don't even need to make money. You can just open and close trades and you would qualify for this. So check it out. Really cool competition here, linked at the top of the description. Obviously, they're going to be the best exchange in the game. And Blowfin is, of course, a great alternative to Bybit. And obviously, only check them out if you are not from a restricted region, okay? If your country has banned these exchanges, or if you're not allowed to use them, then obviously don't break your laws. But bringing it back to the chart right here, I do think that this range really is what's most interesting on this chart at this stage to me, just in terms of a kind of back test. If Bitcoin does end up coming back down here, then hopefully we manage to get a little bit of a bounce, and then that should hopefully take us up toward 90K, because the good news is that there's not a lot left, right? If we've kind of broken this resistance level, I don't really see anywhere else that Bitcoin could struggle. Obviously, there's a little bit over here at about 86.5, and, that could definitely be a problematic zone for Bitcoin. We can see how, it has been problematic for Bitcoin just going back into February as well. But if I go ahead and refresh this, because my trading view is glitching out a little bit again today, ladies and gents. If we do bring it back here to the Bitcoin chart, like I said, probably not much kind of standing between Bitcoin and getting up to that $90,000 price range. That's going to be something that I'm going to kind of keep an eye out for and see if Bitcoin does manage to climb its way back up here. If it does, then, resistance is going to be the first thing that I have to expect, both because this is a slow rally, both because we're not getting very, very high, and because, we've already set a low and now we're setting another one, which is even lower, and that's just not telling you that, this market has a lot of strength, is it? And so that's going to be a sign to me that, we might end up kind of catching a little bit of resistance here. This would be a safer short. I think this is an even safer trade right here. Kind of stop loss above this high, pretty easy trade that I think a lot of people that are kind of interested in trading are going to be looking at, if the market does end up getting up to that point. But I really think that, shorts could be dangerous for the simple reason that the S&P 500 is kind of in a bit of a recovery, right? And when I mentioned that there's reasons outside of Bitcoin that are interesting, this is kind of the main one. Pardon me, guys. And so what I mean about this, quite simply, is the S&P 500 has it's seen quite a bit of a tumble right here. I mean, from its highs down to its low over here, it's a 10.4% correction down to 5,500 on the S&P 500. I have a few thoughts about this. I don't really like to get political, but obviously you can't really have market discussions without getting political at this point, and quite frankly, I'm not scared of it either. It's just something I prefer not to do. But I want to make a couple of observations, which I think you guys have probably made as well. But, one of the first things I think is important is there were a lot of billionaires, like really, really famous billionaires at Trump's inauguration. I'm talking about Bezos, Zuckerberg, Musk, Sundar Pichai, I don't know how you say it, from Google. There's a bunch of, probably, I don't know if was Nadella there? I don't know if Nadella was there, but there was a lot of big guys over there at the inauguration day. And I've seen statistics like collectively they've lost like $200 billion in net worth. And, we can look at, for example, stocks like Tesla, which is just, it's gotten absolutely hammered from its all-time high down to where it is right now. And there's going to be a lot of reasons for this, but, one of the first things we've got to acknowledge is that this is completely fucking normal for these stocks. I don't actually understand why there's so much hysteria about this. It's actually very hard to find a situation on the chart where Tesla stock does not drop by 50%. And if your criteria for this is a bad stock is that it's dropping by 50%, then I don't know what to say to you. Like you're really missing the mark on this chart. Like that's just kind of the accepted volatility on this stock. And I think that's the very, very first thing we need to say, right? Anybody that's losing stock purchasing power right now, or whatever the word is, like stock money, anybody that's losing in the markets right now is probably somebody that's only reverting back to where they were. And let's, drum roll please for this, ladies and gents, for all the fucking dramatic kids in the comment section, only back to where they were 4 months ago, okay, 4.5 months ago, and on billionaire time scale, okay, on the time scale of somebody that's, a big deal in terms of the world, in terms of tech, in terms of money. They don't measure success in 4-month timeframes, okay? You might, as a crypto degenerate, right? And that says something about your financial status, but actually rich people don't do that. And if you want to get rich, you're going to have to think like that, yeah? If you don't already think like that, then that's some homework for you. And if you do think like that, then brilliant, good for you. And I think that's the very, very first thing we've got to acknowledge is that, that it wasn't actually a big drop. But if we do come back to the stock market, and if we do come back to the idea that Trump and his friends have all lost a lot of money, then, we do have to start asking, okay, well, Trump is the stock market guy, right? Like he is the guy that rides in on the white horse and saves the stock market and makes it good. And obviously it was great during Biden. It was great during Trump's previous term, obviously with the exception of COVID, which is nobody's fault in terms of presidents. Potentially nobody's fault. I don't know. Nobody even knows anymore. But, he did a good job. Biden did a good job. So clearly the president doesn't matter. But if anybody is supposed to be the kind of, the person that really makes people get rich off the stock market, it is going to be Trump. And just for that reason, I don't think that this is going to last for that long. I think there's a lot of fear right now. I think there's a lot of really, really good, smart people making good, smart reasons and theories for what's going to happen over the next few months. And all of these theories get slapped on their face when Trump changes his mind about a tariff. And I think it's totally unrealistic to think that that's going to stop. I think that us, right? I'm talking about us guys, us girls that have a tendency to be intellectuals, to be academics about things. We really want to psychoanalyze everything. And I think psychoanalyzing Trump is one of the harder things you could do. I don't know, I might be wrong, but just from what I've seen, it looks like one of the harder things you could do. It doesn't look particularly productive to me. And so because of that, I'm just going back to first principles, yeah? And I think that he's going to protect the stock market. I think he's going to do well. I think that if there was any time to cause a little bit of pain, you and I both know this, the time would have been right after inauguration, not 6 months down the line, not 1 year out down the line, because then he can just blame this on, like he's just fixing the mistakes from Biden, right? Like, it's an obvious narrative that, any sitting president would use, not just him. So, I think that there's a lot going in favor of the stock market kind of recovering. I think also just, I don't believe all of the fear and narratives of the economy slowing down. You only have to look around, and what you'll see is that in a lot of sectors it is slowing down, and in a lot of other sectors it's picking up. And if any of you have been paying attention to how technology changes the world, then you'll know that that's actually quite normal, right? It's actually very, very normal that there are a lot of losers, there are a lot of people losing out, but at the very, very same time, there are entire new industries that are springing up that people are taking advantage of. So the economy being in a bad place is really just a question of who you ask. And honestly, to an extent, it's also who's leveraging the internet. I think that's kind of like a really big kind of litmus test, which, probably a lot of you will kind of relate to at this stage. So again, when we consider all of these things, to me, it doesn't make sense. But look, I'm also not the guy that gives you, stellar macroeconomic analysis, right? I mean, I've only been in financial markets for 8 years, and, for crypto, that makes me a dinosaur. But for, economics, that makes me, a toddler. So, I don't claim to know everything, in that sense, but it also gets silly, right? At what point is it enough, right? If 8 years isn't enough, then what is it? 15? Is it 20? Is it 30? Like, it just gets a bit silly. Human lifetime only lasts so long. I think that 8 years is pretty reasonable to say that you can start having a good idea of where things could be going. And right now we have everybody and their grandmother telling me that we're going to be going into a recession and whatever. It makes sense. I can understand their reasoning. And yeah, I can also point out that the charts are still pointed up and to the right, and things still look absolutely phenomenal. Okay, so bringing that back to price, what that means is that the S&P 500 could certainly be looking at a chance to rally higher. I do think that getting up to kind of the 5750 up to the kind of 5850 range makes sense for the S&P 500 at least. This is the start of where I start expecting some resistance and this thing potentially tumbling lower. That's where I would start to expect that. Whether this tumble happens down to here, or whether it only happens down to here, or whether it doesn't happen at all and it just goes sideways, whatever the case is, I still think that some issues will come up in this price range, 5750 to 5850. It was, of course, the S&P 500's previous all-time high, and it didn't result in a big drop, but it did result in a 2.8% correction. And then more importantly than that, I think, 1, 2, 3, 4 separate bounces off this level as well. So, definitely a level which I think could be a little bit of a problem for the S&P 500, but it also means that if the S&P 500 manages to get above this level, then there's really nothing stopping it from getting back up to those all-time highs. So what's really important is that for this chart to recover, for this chart to start putting itself in a better place, bearing in mind that we're on Wednesday, the stock market at the time of recording still hasn't closed, but it will be closing very soon. This is a good week so far. It's also expected. I was definitely expecting this to happen because, you can't really expect that the markets are going to stay suppressed forever. They're going to have retracements. Even if they keep on going down, you still have to expect bounces. So this looks like the bounce week. And if it is going to be a bounce week, and if it's only going to last a week, then again, this range makes a lot of sense for resistance. So this is something I'd be looking at. Obviously, Bitcoin at the time of me recording right now is continuing to punch higher. It's actually just started to break through a little bit further above my breakout point now. It's now up by about 1.5%. And, basically, the S&P 500 at that resistance level that I was just describing, you can rewind if you're missing what I'm saying, probably aligns with, I don't know, like an $88,000 to $89,000 Bitcoin. That's probably what I'm what I'm expecting, right? Maybe even up to 90. where basically SPX goes up by a little bit, Bitcoin goes up by a little bit more, okay? And we're seeing that happening right now. So that's what I think about the S&P 500 in terms of its kind of bear case, is this is where it starts getting bad. In terms of its bull case, obviously if it flips this level, then, you're kind of off to the races. I don't know how likely I think this is. Usually I would like to tell you, I think it's like X% that we kind of drop and Y% that we go up. But again, I think it's just completely down to the White House right now, and that just makes it too unpredictable to predict, in my opinion. It also makes it dangerous to predict. It also makes it unproductive to predict. So, that's a lot of reasons that kind of turns me away. Like, I don't need to, and I think that's something that people really, really miss out. Like, you got to keep in mind when you're talking to me, when you're listening to me on YouTube, you're listening to somebody that actually legitimately trades, and almost nobody else on YouTube does that, and so they give you really, really bad kind of pointers on how they view the market and how you might view the market. But ultimately, what I'll tell you as somebody who does actually trade, who does actually risk capital in the markets just like you don't need to risk your money all the time, right? Like if an opportunity is subpar, or if it's not good enough for you to love it, you don't need to trade it. And oftentimes, if you're actually a little bit more picky like that, you're going to walk away from these markets with more wins, and you're going to walk away from these markets with less losses, okay? So I think that's really, really important. And just on those notes, guys, if you do want to trade with free capital in these markets, the exchange is linked in the description, including this Bybit link with that competition that I showed you right here. They're going to give you free money that you can trade with when you start trading. So what you've got to do is just sign up using that link and start trading. And they're going to, the link might be slightly different, but it's always the same. And then, depending on what you trade and deposit with, they are going to send you free money into your account. And you can, whatever you like, you can do whatever you like with that. Same for Blowfin. They have very, very much more aggressive promotions actually on Blowfin sometimes. So check them out as well. Again, all with the links in the description below, and only if you're not from a restricted region. But again, bringing it back to the market and in terms of where the opportunities are, I think that as a real kind of legitimate trader, you are kind of pushing yourself into danger if you're trading suboptimal setups, or if you're trading setups that you're not, fully convicted of, or that they don't have full conviction with, I guess. English is escaping me, but that's what I meant. And so if you can kind of spot these things, and if you can avoid these things, then you'll find yourself in a really good place. But if you can't, that will be at your own demise, okay? That will be at your own peril. You will not be happy with how that goes for you, okay? That's just my experience as somebody who also risks money in the markets. I can talk to you with experience. Almost nobody else can, so you've got to be very, very careful of who you're listening to. But when you are talking to people who are actually traders, and especially people who've been in the game for a long time profitably, I think one of the main things that they'll tell you is that you need to protect your money first and foremost, okay? And that means not trading things that are subpar, okay? That in real life, if you do more work, if you do more shit, you get paid more. I get it. If you're a lawyer, if you're whatever, you get paid more the more work you do. But in this game, in trading, you will, if you take that attitude here, you will end up overanalyzing, you will end up overtrading, you will end up revenge trading. It's going to be really, really bad for you, okay? So let's just not even go there. That's the point. Let's just not even let it get there. So S&P 500, I don't know, right? And it's not a question that I'm even going to try and answer if it kind of flips this level. Right now, I'll tell you what I see from a technical analyst's perspective. It's that we're in a downtrend, okay? It's that we had a few kind of macro higher highs and we've lost them. Obviously, on a slightly more macro scale, we're still doing well. But that's the S&P. We are in a downtrend and we're going to be approaching a resistance level. So that's going to be the natural thing to expect as a normal kind of technical analyst. And that's the same thing that I was telling you guys on Bitcoin earlier in the video. Bitcoin's setup is even clearer because it's already punched in two lows, and this second low is even lower, which does definitely indicate that strength is leaving this market. So, that can be a bigger sign that we kind of have to retrace a little bit lower. Ultimately, as we've been saying on this channel for a while, the bigger we retrace, the longer we retrace, the better it's going to be for the market. I think one thing that I'd really like to point out is that everybody panicking over here and everybody panicking over here are also the same people panicking here. They're also the same people panicking here, and they're certainly the same people panicking here, okay? So that's really, really important, because if you are watching this YouTube channel throughout all of those points in the market, you're going to know very well how I've been approaching this on this YouTube channel. and we actually have been, remarkably quite consistently bullish in this market in terms of being bullish, at every single consolidation zone, and obviously that ended up quite literally paying off very, very well, as you guys are quite well aware of at this point, right? I've been sharing with you a lot of the kind of screenshots of the profits that would be generated in this market. I don't know if I've got one right here. I think I've got the outdated one right here, but this is still, very, very impressive. This 1,000% right here on Bitcoin. Obviously, this is down when the price was at 43K. So, it's going to be significantly more profit than this right now, closer to 3,000%, but still. It doesn't, not still, it even strengthens my point. The point is, that we've been right about this the whole time. The market has been wrong about this the whole time. The market is always wrong about everything. So, I think that the trend is still pretty clearly up. And what I really want to point out is that, I think a lot of people were really quite frustrated and scared of this range when we were in this range. And all of those feelings now would have felt very silly when we got up into this range. And they probably still feel very silly right now, right? I mean, at best, your best case scenario, if you were panicking in this range, you've just contributed to a few more unnecessary gray hairs that you didn't need to have. So that's the best case scenario. And in the worst case scenario, it's actually worse than that, and you damaged yourself and you lost some money, and maybe you rebought at higher levels, or maybe you sold a little bit at 68 and rebought at 60 and you feel really chuffed about that. But I don't even think that's something necessarily to be proud of unless you had the explicit intention to do that, because if you're risking taking yourself out of the market for like a 13% better entry, you gotta have balls of steel if you're doing stuff like that, because if you get left behind over a 13% better entry, that's just you're gonna feel very silly about that. If the market does kind of pull off another kind of 2-3x or whatever, I don't know if it will. There's really no guarantees, but obviously I think that we're still looking really, really bullish. So I think that's a kind of important perspective. If however you had the intention to do that kind of trade and you were kind of looking to that and that was your strategy, then brilliant, you execute on your strategy. And then in that case, that's 100 out of 10. That's like a 10 out of 10 amazing kind of success thing. But if you just kind of did it because you were nervous and you were like, I'll feel better if my entry is a little bit lower, that is dangerous, right? That is like a really, really dangerous approach. And that's the really big difference, I think, between people who make money and people who lose money in these markets. It's a nuanced discussion. There's some really, really interesting things that can kind of be discussed on these notes. And if you want to get into our most exclusive program in the Four Flies brand, it is available with this link in the description down below. All you've got to do is reach out and send a message directly. A member of the team will get back to you and tell you everything that you need to know. It's a very expensive package. It's a very serious package. It lasts a long time. But we haven't had a single person fail to pay off that fee. Absolutely everybody that gets in is blown away with the value and with the things that they gain to move forward in the market, both to prevent losses and to maximize winners. It's not necessarily always going to work, but so far it's never failed for anybody that's ever entered. So really, really well worth checking out. If you want to, you can do that with this link in the description below. But bringing it back to the chart once again, we do, like I said, now have a situation where, if you were panicked at these kind of price ranges, that's going to feel silly now. And I think that's going to be the same case, obviously, moving forward, because I really don't think that we've topped out. I think it's very, very silly to say that we've topped out. And I think that basically all of the facts are still pointing in the upward direction. It's only emotions that are pointing down. And if that was, if that's something to look out for an opportunity to buy, then you would have seen it over here. You would have seen it over here. You would have seen it over here. You certainly would have seen it all over here. You will always see that kind of combination of factors at the exact market bottoms. So does that mean that this is a market bottom? I don't know. It's not really the point of what I'm saying. The point of what I'm saying is that this is still a pretty good time in the market, just according to everything that we've seen before. Whether we sweep the low and go lower or not, I still think that we're poised to go significantly higher, and I don't think it's going to take long. I think that we could do this kind of by Q3, Q4 of this year max. And best case scenario, it could even happen sooner. And I really think it could happen sooner, because if the whole market's fate is in the hands of one president that, one day is just going to decide that he wants the stock market to stop being green again, if the whole market's fate is looking like that, then I don't see any reason to expect that this is going to be different. So I would still expect it to kind of recover. So we'll just have to see if we flip this level on the S&P 500, this 5,800 zone. That's going to be really the thing that tells you what's going to be happening moving forward. So that's going to be really the thing that we want to be watching out for. But failing that, I think, we've just got to keep on watching the chart. Bitcoin is in a downtrend. It's moving in a weak way. It's not looking good from this perspective. It's got more and more resistance mounting over it. It's probably poised to start moving down, and so I'm going to be looking to see where those resistance levels could be coming in. Hopefully, I get proven wrong. I would rather Bitcoin goes up, so I'm still going to watch out to see if this thesis can be challenged, and to see if new data comes up that kind of challenges what I'm saying. But right now, a little bit higher, for a smackdown is kind of the main thing that I'm seeing. I do want to take a quick look at Bitcoin's dominance, which has dipped down by a little bit. But, if we look at Ethereum, I mean, it's in a bit of a recovery right now, but we kind of know how this goes. We've seen this a million times. It can be a big recovery, something that looks a little bit like this, or it can be, quite a meager recovery like this. I don't know, and it doesn't matter. But the point is, Ethereum's in a really bad place right now, ladies and gents. I mean, it's really fallen down below one of its more important levels. I obviously don't think that Ethereum is dead or gonna die, and so to me, this is just an interesting chart to buy. I still haven't bought. You guys have heard me, in this dilemma against myself for months and months and months, telling you guys that, I think it's a great buy, but telling you that I also still haven't bought. I'm going through this with you. I'm really not that special. I don't hold the answers. You're seeing me do what I do in real time, and that's what you've been seeing, over all of these years on this YouTube channel. That's really all we do. And I'm still happy with, I've still, every time I've kind of waited, it's worked out for me. I think, for me at this stage, I'm also quite okay with buying it a little bit late, right? Like on a breakout over here, that, that does mean that I'm missing the first kind of 22%, but if the price goes up, I'm still getting a really nice, like 50% out of that, right? And that's only to the 0.4 BTC level. So like I said, I still think it's going to recover. I just think it's going to recover when Bitcoin dominance stops going up. And I think Bitcoin dominance is going to stop going up at least after Bitcoin crashes or goes up, whichever one happens. I don't know. It's obviously not clear, but I think eventually we're definitely going up, regardless of how much dropping we do. And I just don't think that Bitcoin dominance is done, kind of from that perspective. So I'm not going to get too crazy, but I still think that it's a great time to be dollar cost averaging right now. I think that anybody that's kind of less technical, I've had friends come to me and I've been like, hey, I think just dollar cost average is, a pretty guaranteed way to make money in this market in about 6 months, 1 year. So if that's your kind of time, not even, a little bit of money, probably like a lot of money, I think, that is what I've been telling my friends. I wouldn't tell you guys because I'm a YouTuber and like apparently things are different, when you're a content creator online. I think the laws are stupid that way, but that's just how it is. I can speak freely to my friends, but not to you guys. I don't know. It's kind of weird, but you guys get the deal. Obviously, let's flash this disclaimer on screen real quick to make it very, very clear that I'm actually also an idiot and that you shouldn't be an idiot and you should do your own analysis. You should do your own research and all that stuff. So you guys get the deal there. Bitcoin dominance, nice and easily settled. S&P 500, nice and easily settled. I do want to talk to you about gold. It's tradable on Bybit now, which is very, very cool. Linked at the top. Again, only for people not restricted. But what's really cool about gold is it's now broken $3,000, right? And we've been talking about this for a really long time. It's one of the big kind of predictions that I made on this YouTube channel years ago, that I was expecting it to hit $3,000. It's now finally done that. If you have been subscribed to the channel, then you'll know that my target is actually now 3,500. Because it just took us so long to get here, so I'm just raising my target alongside that, and so we're kind of we're even closing in on 3,500 now. We're at 30.50 more or less. Where did we top out today? We topped out at 30.50, so only $450 left to go to get up to 3.5, and that's really not much. That's only a 15% move from here. So I think honestly something that's going to be quite easy at this point for gold to pull off. My target isn't actually 3,500 anymore, by the way. I've raised it. I just haven't told you guys. I'm telling you now. I now think it could get to 3,600. So it's not a big increase, but I certainly think 3,600 is possible. 4,000 is only a speculative rally away. So gold is looking pretty damn good. Gold does seem to be moving more in response to global war rather than politics or even economics. So I think that's something that we've got to kind of keep an eye out for. I could also be completely wrong about that read, but that just seems to be how it's gone for me, like the way I've seen it recently. It didn't used to be that way. I think there used to be quite a clear narrative of gold kind of tracking inflation and gold tracking money. But, I think that kind of went out of the window when all of the inflation happened here after COVID, and gold was being suppressed. So it looks like gold is kind of responding to different things in this decade now. And, if you're kind of late to spot those shifts in how markets work, I don't know what's going on with my voice, but if you're late to spot those shifts, then you could be walking yourself into some trouble. Okay, this is a very long video. I will see you all in the next one. Thank you for watching. Make sure you hit up those likes, subscribe, tick the bell, do all that good stuff. Beautiful links down below for great bonuses if you're allowed to, and also a phenomenal one-to-one exclusive program which you can get access to by following this link on screen and asking the question. Cheers. See you all in the next one. Bye.